The crash of cryptocurrency? My method for transforming $100 into $10,000. There is a well-known reputation for the volatility of the Bitcoin market. I was able to transform a $100 investment into a $10,000 portfolio, although many investors lost a significant amount of money during the previous crash. This was not the result of pure luck. Rather, it was the result of a methodical approach that incorporates careful research, methodical risk management, and the taking of risks that have been carefully considered. In the beginning, I made a small investment of $100, which I was able to afford to lose totally. Throughout the duration of the economic slump, this limited the potential for financial damage to a minimum. In the beginning of my inquiry, I looked for cryptocurrencies that had strong fundamentals and a track record of being able to recover from setbacks. I avoided coins that were overly speculative or based on memes whenever possible. The technology, team, community, and market position of each endeavor were all subjected to a thorough examination as part of this process. At the very top of my list are projects that have well-defined roadmaps, are making actual progress, and have a development crew that is both dedicated and experienced. When dealing with the volatile world of cryptocurrency, it is of the utmost importance to complete your research. The crash of the market brought up a number of opportunities as well as issues. In terms of my strategy, there were a few primary ideas that guided me. A strategy known as dollar cost averaging, DCA, involved investing smaller amounts of money over a period of time. This strategy made it easier to deal with unanticipated drops in price. When engaging in strategic selling, it is important to maintain a close eye on the market and search for opportunities to sell shares before prices drop even further. In order to buy the dip, it was necessary to select fundamentally sound cryptocurrencies that were experiencing a temporary decline in value due to the market's downward trend. This was a well-planned gamble that ended up being extremely profitable. I only invested money that I could confidently afford to lose in its whole. Risk management was of the utmost importance. In order to make informed decisions regarding your finances, it was necessary to stay current on market news, technical signs, and social sentiment. It was beneficial for me to be able to adjust my strategy in response to the changing conditions of the market. With the market beginning to show signs of improvement, I began to consolidate my holdings in a methodical manner, concentrating on a smaller number of cryptocurrencies that showed a great deal of potential. This made it much simpler for me to manage my portfolio and enabled me to concentrate my efforts on regions that have the most potential for growth. As the market began to recover, it was essential to maintain a close eye on the situation and to make adjustments that were well thought out. After the value of my investment had significantly increased to approximately $10,000, I began to take profits in order to safeguard my gains. Then, in order to reduce my risk even further and to reduce the amount of reliance I have on the volatile Bitcoin market, I spread my investments over a variety of other sorts of assets. If you want to maintain your financial security over the long term, this strategic diversification is quite crucial. The fact that I went from 100 to 10,000 during a crypto meltdown teaches me a lot of valuable lessons, including the following. You should begin with a small amount of money and only invest what you can afford to lose. Do a lot of research and make sure you are familiar with the people and technologies that are behind any project you are working on. To effectively manage your risk, you should implement strategies such as dollar cost averaging and stop-loss orders. Keeping up on the latest market news and trends is the best way to stay current. Keep an open mind and be willing to adjust your strategy as necessary. Your portfolio should be diversified by investing your money in a variety of different sorts of assets. It was not about increasing one's wealth in a short amount of time. Rather, it was about making choices that were rational, well-informed, and risk management that was disciplined. The Bitcoin market is still pretty turbulent, and it is possible that you may not experience the same thing that happened to me. Before making any investments, you should always conduct your own thorough research.